Welcome to The Swing, the official newsletter of the Forex Trade Room, Volume 25, October 11, 2024. The US dollar index surged to nearly 103 on Friday, marking its highest level in 2 months. This rise comes as recent economic data, including a slight increase in core inflation, suggests that underlying inflation may remain sticky in the US economy. Price pressures in areas like shelter and transportation lifted the CPI more than expected, which may prevent the Federal Reserve from cutting rates aggressively next year. Atlanta Fed President Raphael Bostic hinted that he might favor holding rates steady in November based on economic conditions. The Australian dollar held steady above 67 cents on Friday, though it traded near a 4-week low. Strong U.S. economic data has raised expectations that the Federal Reserve will be cautious with interest rate cuts, while a Fed official hinted at holding rates steady in November. Investors are also closely watching for stimulus announcements from China, Australia's key trading partner, set for this weekend. Meanwhile, minutes from the Reserve Bank of Australia's latest meeting showed discussions about both rate cuts and hikes, but the RBA concluded that current rates are appropriate for now. The Canadian dollar depreciated to 1.37 per USD, its weakest point since mid-August, as the US dollar strengthened amid expectations that the Federal Reserve will take a slower approach to rate cuts. In Canada, a stronger-than-expected jobs report, 46.7 thousand jobs added in September and an unemployment rate drop to 6.5%, reduced investor bets for a larger rate cut by the Bank of Canada this month. However, a 25 basis point cut is still anticipated on October 23. The Japanese yen traded near 148.7 per dollar on Friday, close to its lowest level since August. The yen has come under pressure as the US dollar strengthens, with investors expecting the Federal Reserve to be more cautious with rate cuts. Strong US jobs and inflation data have fueled speculation that the Fed may keep rates steady in November. Meanwhile, Japan's Prime Minister Shigeru Ishiba hinted that the country's economic conditions may not call for more rate hikes, though officials later clarified that no specific guidance was given to the Bank of Japan. The New Zealand dollar held steady around 61 cents on Friday, supported by rising food inflation and expectations of further rate cuts from the Reserve Bank of New Zealand. Annual food inflation jumped to 1.2% in September, while the manufacturing sector showed slight improvement but stayed in contraction for the 19th consecutive month. The RBNZ recently cut rates by 50 basis points and signaled more easing ahead, with investors betting on another 50 BPS cut in November. Meanwhile, U.S. inflation and jobless claims data boosted expectations for a Federal Reserve rate cut in the coming months. The Swiss franc weakened slightly to around 0.85 per USD after Swiss inflation eased to 0.8%, missing expectations of 1.1%. This softer inflation data has fueled speculation that the Swiss National Bank may push for a 50 basis point rate cut in December, after already cutting rates by 25 basis points in 3 consecutive meetings. Meanwhile, the US dollar strengthened, reaching a 3-week high as robust US private employment data lowered the likelihood of aggressive Federal Reserve rate cuts. The British pound fell below $1.31, marking its lowest level in about a month due to a stronger US dollar and expectations that the Federal Reserve will take a slower approach to lowering rates. In the UK, investors are anticipating a more aggressive stance from the Bank of England, as Governor Andrew Bailey suggested that further rate cuts could be on the horizon if inflation continues to ease. The Bank of England held rates steady at 5% in September after a quarter-point cut in August, with traders now expecting 2 more cuts in 2024. UK GDP expanded by 0.2% in August, pointing to slower growth in the third quarter. The euro traded around $1.09 on Friday, its lowest level in 2 months, as the US dollar strengthened amid expectations that the Federal Reserve will lower rates more cautiously. In Europe, the ECB is expected to cut the deposit rate by 25 basis points at its upcoming meeting, following similar moves in June and September. Markets are betting on further rate cuts at every ECB meeting through March. Meanwhile, Eurozone inflation dropped to 1.8% in September, the lowest in over 3 years, reinforcing the outlook for continued easing by the ECB. The Mexican peso weakened past 19.4 per USD, moving further from its 2-week high as investors evaluated Mexico's latest inflation data and the strengthening US dollar. Mexico's core inflation fell to 3.91% in September, while headline inflation dropped to 4.58%, both below market expectations. These softer numbers raise the possibility of further rate cuts by the Bank of Mexico, putting additional pressure on the peso. Meanwhile, the US dollar strengthened due to expectations that the Federal Reserve may remain less dovish and increased demand for safe haven assets, further weighing on the peso. WTI crude oil futures dipped by 0.3% to settle at $75.50 per barrel on Friday, as investors assessed the potential supply disruptions from ongoing Middle East tensions and the effects of Hurricane Milton on fuel demand in Florida. Despite the dip, WTI crude posted its second consecutive weekly gain, up more than 10% since Iran's missile attack on Israel. The rally has been driven by fears of supply interruptions in the Middle East. On the demand side, optimism grew after China proposed new measures to support private sector growth, boosting confidence in its slowing economy. Gold surged above $2,640 per ounce on Friday, extending gains as traders assessed the Federal Reserve's policy direction amid mixed economic data. U.S. inflation showed mixed signals, with headline inflation slowing less than expected while core inflation rose higher, suggesting the Fed may slow down its pace of rate cuts. The latest FOMC minutes backed this view, with an 86% chance of a 25 basis points rate reduction in November. Meanwhile, rising jobless claims challenged the strength of the U.S. labor market. Investors now await producer inflation data for further insights, with gold on track for its second weekly decline. U.S. stocks rallied on Friday, driven by strong bank earnings. The S&P 500 and Dow Jones hit new highs, while the Nasdaq closed slightly higher. Economic data showed unchanged wholesale inflation, adding to positive sentiment. Overall, investors were bullish with solid weekly gains across all major indices. This week, market focus will be on U.S. retail sales, Federal Reserve speeches, and key data on industrial production, housing, and earnings reports from companies like UnitedHealth, Bank of America, and Netflix. In Europe, the European Central Bank's interest rate decision and key data from Germany and the euro area are in focus. The UK will release reports on unemployment, inflation, and retail sales, while China will announce its Q3 GDP and other key economic data. Inflation data from India, Canada, and other countries will also be watched closely. Tune in for Mindset Mondays with Ryan Carthage at 6:30 a.m. Eastern Standard Time. Good luck in the markets this week.